If I had to start over again in 2025 with no accounts, no experience, and not much budget, here's exactly how I would trade prop firms. And listen, I've made every mistake you can imagine when it comes to prop firm trading. So instead of wasting years like I did in the beginning, you're about to get a shortcut. By the end of this video, you'll have the exact 5 steps that I would use if I were to start over again in 2025. But before we jump in, I actually have a question for my fellow prop traders. What would you do if you were to start again today? I'd love to know how you'd go about this, and stick around because you'd actually get my answer later in the video as well. Right, here's how I'm going to break it down for you guys. In the first part, I'm actually going to give you all the mistakes I made when I started out. And then in part 2, I'm going to be talking about the prop firm landscape as it sits now in 2025, because I think this is very, very important when it comes to starting over. Then part 3, I'm going to be giving you my exact blueprint, what I would do if I were to start over. And then finally, like I promised, I'm going to give the newer traders to the industry, traders that have not done this before, what you can do if you're starting out now in 2025. So that being said, let's dive straight in, guys. And let's start by looking back at the mistakes I made when I first started. When I first jumped into prop firm trading, I'd already been trading for a long time and I had experience in the market. So I just assumed this was going to be easy money. My first big mistake. I remember back then I would trade way too much, I'd risk too much, and I'd also overtrade, just thinking that I could get the job done very, very quickly. Because back then we actually had a time limit. We had a month to do these challenges in. So I was kind of like, let's just get it done. You know, I'm only risking $500 for this 100K account. And I traded it totally different. I traded these prop firm accounts totally different to how I was trading a live account, for example. Don't ask me why, but there was just some weird switch that went off in my head when I started trading prop firms, and I just traded differently. And then the next mistake I made was putting all of my trust into one firm. I never diversified. I would start with a prop firm. I think the first prop firm I started with was My Forex Funds. I traded for ages, took a long time, and finally when I eventually passed and got to a funded account, I was so scared to trade that funded account because I'd worked so hard for it, and now I had this asset. It felt like I had this asset, and I was so scared to trade on it that I traded so little on it. Like I would only take maybe 1 trade a week, and even that trade I would down risk so much. I was barely getting anything back from it. And then I carried on taking challenges on the same prop firm, and when I finally passed and got a second funded account, I thought to myself, okay, now maybe I can start pushing this one. I can actually go a little bit more risky on the first one. But the second I was like, okay, I'm jumping in, I'm going to go a little bit more risky. What happened? My Forex Funds turned around, shut their doors because of all the regulatory issues that happened back then. Basically, because I had everything in one basket, that basket dropped and all my eggs broke and I lost everything. So all that kind of stress and all the hard work and everything was almost for nothing, because even though I had a funded account, I didn't really take advantage of it. I didn't really make enough back from it. And then what did I do? I did the same thing again. I started with True Forex Funds. Same thing. Took me a long time. Finally got passed. Finally got a challenge passed, and I got the funded account. And again, trading it so slowly with one prop firm at a time. And that was my biggest mistake. I never diversified. And that's one of the biggest mistakes that I would change now, knowing that now coming into the market. And then the final mistake I want to talk about is not really having a game plan and not having a backup plan, right? So I went in with just like the thought, I'm going to pass this and I'm going to make loads of money, but there was no real plan of action, right? And also I had no backup plan. What if I did fail 4, 5, 6, 7 in a row? I never thought about that. Now I do have a backup plan, and my backup plan is I have a system in place. We use a system that basically hedges everything we do on our challenges, so that it means that any challenge fee that we have put in, if we lose the challenge, if we fail, we make about 80 to 100% of that back. So that's my backup plan. And now I trade with no emotion. Like I don't care if I pass or fail. I don't really care because I have that backup plan in place. Now this leads me on to part 2, where I want to talk about where the prop firm industry is now in 2025 and where we've come from. So how are things different now and why does it matter? Well, if you go back to prop firms back in the day when I first started, things were very, very different. There wasn't a lot of regulations in place. So that means there was a lot of fiddling and a lot of things that the prop firms would do kind of to make it a lot more difficult in dodgy ways for us traders. In some aspects, it was easier for traders because they wanted to draw traders in, but then they would do like funny things with spreads and, you know, all this stuff that they kind of manipulated to make it much harder for traders. So once the regulation hammer came in and smashed down on My Forex Funds, that kind of sent this ripple through the prop firm industry. And then as a result, you know, we had this weird phase where prop firms were kind of like trying to change change things, do different things. And as a result, in the wake of that, we had other prop firms closing, True Forex Funds, the Funded Trader. So we had a lot of prop firms closing, and then we had a lot of change as a result. And if you fast forward to where we are now, because of that change, yes, we now have challenges that are a lot more difficult in general because, you know, we have stricter rules. They are kind of very much against your gambling type traders. You can't kind of go in with big lots. So there's a lot more restrictions when it comes to these challenges, but there's also a lot of really good that came from it. For example, we have different types of challenges that came from this. The one step, because before it was only two-step or two-phase challenges, but now as a result of this, you know, they're constantly looking for new ways to draw traders in, because that whole thing, you know, made traders like, I don't want to trade prop firms. So they had to do things to attract us again, right? So this led to a lot of good changes, right? We've got now single phase challenges. So it is easier from that point of view to get to your funded account. You only have to do one phase. And they even brought in things like straight to funded. Yes, it's more expensive, but it started opening the door to all these new types of challenges. And it also was better for the trader because now prop firms were under the magnifying glass and they had to behave. And that's not to say there's still prop firms that are, you know, doing some dodgy stuff. There are definitely, but it's worth noting that with everything that has happened in the industry and where it is now, I think is really good for the traders. And the other thing I want to talk about is as a result of everything and where we've come from, there are a lot of prop firms, you know, even more so than back when I first started. But with that being said, you've still got to be very careful, right? Don't just look for the cheap prop firms. Don't just look for the prop firms that have easy challenges, right? You've got to make sure that you're picking the right prop firms based on your trading style, based on, you know, the rules and the regulations that best fit you as a trader. The other good thing I want to point out about where we are with the prop firm industry now is just the sheer number of prop firms that are available, but also the new prop firms that are constantly coming into the space. This does mean there's going to be some dodgy ones, but it also means there's always going to be new good prop firms that we can choose from. All right, now guys, moving to the part you guys have all been waiting for, and that is my blueprint. What would I do differently if I were to start today? Step one would be making sure that I am coming to the market, coming to the prop firm industry with a system or a strategy that I know has a proven edge. Very important, that word, guys, proven edge. How do you have a proven edge? It's basically coming to the market, back testing your system, back testing your strategy against a huge amount of back testing data, then also forward testing it, making sure you have tested your strategy on live data and getting to a point that you can see that your system has got an edge. Because this makes it a lot easier when you're going into a prop firm. All you got to do is play your system out. No matter whether you're winning or losing, you know long term your system will have an edge. And with that knowledge, if you're diversifying, you will not have an issue when it comes to prop firm trading. Okay, so this leads me straight on to step two, which is picking the right prop firms. Now, like I said, there's a lot of prop firms out there, and there's a lot of prop firms that are probably good for you and a lot that are bad for you. So you've got to know what style you're trading, what your strategy is, how your strategy works, and based on that, make sure you're picking the prop firms which rules align with your system or align with your strategy. You don't want to be jumping into a prop firm, just going in, paying for the challenge, and then once you start, realize that you actually can't trade your strategy or your system because of some of the things that they have in place, some of the rules that it's just like impossible to trade. So make sure you're picking the right prop firms. Then the other thing is, don't just choose the cheapest, right? Don't just look at the cheapest and the ones that you think are the easiest, because cheap isn't always best, right? Make sure you're reading through all the rules and the regulations. Make sure you're looking at all the FAQs. Make sure you are picking, I would say, 3 to 5 prop firms that align with your strategy, align with your system, that you know are paying out traders. Their reputation is good based on things like Trustpilot, all of that stuff. You've got to do your research and make sure you're picking good prop firms. And I would say make sure you have about 3 to 5 on your list, because like I said, diversification is very important. I'm actually talking about that as well. Right, so with that being said, let's start with step 3, and that is knowing your risk and starting small if needed. So what does this mean? When you're coming to the prop firm industry, you have a set amount of cash set aside that you're saying, okay, I'm willing to, you know, use this for this journey, right? Number one, make sure that you can afford to lose that. Make sure this is not your life savings, right? Because the prop firm industry is one that, as we know, can be a little bit tricky, right? So make sure you are taking a amount of cash that you are willing to lose. Then have a look. What is that amount? How much is that? And what can you potentially trade with that, right? If you can go in and say, I can start 5 to 10, 100K challenges with this, that's great. Do that. But if you're looking at that and you're saying, I can only start start 100K challenge or maybe 200K challenge, maybe look at saying, okay, I'm going to take this, and instead of doing 1 or 200K, I'm going to split this up so I've got up to 10K accounts or 25K accounts. Give yourself as much chance as you possibly can, because in my experience, a good funded rate with prop firms is around 20 to 30%. Now, let that number sink in, guys. I'm talking about good traders with good systems. 20 to 30% of their accounts will get to a funded stage, right? And that's not even saying that they will get a payout. So you've got to make sure that you can withstand those challenges failing and get to a point where you do get to the funded account and you do get to the payouts, because that's when you will start paying off your losses. Only then will your system start to kind of actually start to move, right? So make sure you have a very clear understanding of what you're risking before you even start. All right, now we're going to go on to step 4, and that is diversifying and automating. And I'll talk about why I'm saying automating, but let's start with the diversification, guys. I've talked about this already like 2 or 3 times in this video. Diversification is so important, guys, because we know how the prop firm industry works, right? You want to make sure you are selecting 3 to 5 initially different prop firms that you can start taking challenges with. And I would say, depending on your budget, which we just talked about, you want to be starting with at least 2 to 3 challenges when you initially set off, right? And this way, it's going to give you the opportunity to kind of run multiple prop firm challenges at the same time, that it's giving you opportunities with different prop firms. So if you maybe get funded with one, you fail the other 2, that one can start going, the other ones can keep going. You get to a point where maybe you're running 5 at a time and you have maybe 1 or 2 funded, the rest are running, that if any time anything happens with any of the prop firms, because we know that this can happen overnight, things can change with prop firms very, very quickly. And this diversification, it's just going to make it so that these don't hurt you. You can lose a prop firm, you can lose an account based on something that is out of your control, and it's not going to hurt you because you have your other accounts backing you up and keeping things going. So diversification is very important. The next thing I want to talk about is automation. This comes with the diversification, because if you are trying to take 2, 3, 4, 5 challenges at the same time, it's going to be very difficult to manage all of those, right? How are you going to trade all of that at the same time? You got your manual strategy, you're doing it. It's going to be very difficult. So try and figure out if there's any way that you can automate any part or all of your process. If you can create an EA based on your strategy, then I would suggest do that. Do something that is going to automate some or all of the strategy or the system, and that's going to make it a lot easier for you to kind of start setting up this machine that just works for you and is running this like a business, right? It's just kind of churning these out. Pass or fail, it doesn't matter. You just kind of keep on doing that. We have some people in our community that are running up to 20 challenges, 20 accounts, should I say, not challenges. Some of them are in funded phase, some of them are in, different phases of the challenge, but up to 20 accounts at a time. And this is only possible because the number 1, they're diversifying, and number 2, they've automated the system. Now, we have got a whole system, and I'm going to be talking about that. So if you're sitting there wondering, like, how do I automate, just hang on till the end, because I will actually be talking about how we do it. And then the final step, the final thing that I would make sure I'm doing when I start is always know your risk for each prop firm, right? Don't just trade exactly the same across. You can trade the same strategy, but make sure you understand the risk with each prop firm, because some of them have, smaller daily drawdown limits. Some of them have different types of drawdown. So make sure you know your risk based on each prop firm. Maybe one, you can actually take 1% per trade. Maybe some of them you can push it a bit further. Maybe some of them you have to halve. You have to go to like 0.5%, and make sure that if you are getting, a stop out, if you are stopping, if you are losing a trade, make sure your system shuts down. You don't trade again till the next day, right? Don't over leverage, don't over risk. Make sure you are giving yourself another day to trade, because with these prop firms, you can very, very easily be on track and everything running smoothly, and you have one day that things go bad. Make sure your risk management is on point. Very important. So yes, these are the 5 things that I would do now if I were to start trading today with prop firms. But the other thing I want to talk about, like I mentioned in the mistakes I made, and that is making sure I have a backup plan. And my backup plan now is, like I said, hedging whatever happens on my prop firm account. So I'm essentially always getting an 80 to 100% discount on my prop firm challenges. So it always means that the most I will ever spend on a prop firm account is maybe about 10 to 20% of whatever the prop firm costs. So if it's a $500 account, I'm only going to be spending about $50 to $80 on that account, right? So my input is way lower, and as a result, I trade with no emotions. It doesn't bother me when I'm losing 4, 5, 6 challenges in a row. And that on its own can make your prop firm journey so much more enjoyable. I'm not saying you have to have my exact backup plan, but I'm just saying make sure you have a backup plan in place for those times that you are going to be hitting 4, 5, 6, 7, 8 losses, challenge fails in a row. What are you going to do? Put yourself in that scenario. What would you do? With that being said, guys, let's move on to tips for the traders that are coming into prop firms right now. You're brand new to trading, or maybe you've traded a bit, but you're only entering the prop firm space right now. Here's some tips for you guys. So first thing I would say is find your system, find your strategy, and then back test it. Make sure you back test it for at least a year's worth of data, right? And then once you are happy with that and it's still looking good, then take that to a live market on a demo account. Trade it on a demo account and set up the demo account similar way to what the prop firms would have it. So make sure you've got your 1 to 100 leverage, or 1 to 30 if that's what the prop firm is going to be. And then I would suggest trading this for at least 1 to 3 months, and make sure that even in those 3 months your system has got an edge on the market. Very, very important. And that way you're going to be prepared when you go to the prop firm challenge and you sign up and you actually start trading for real. And the next one is, before you go in, write up your plan of action, exactly what you're going to do, how much you have to risk, how much you're going to break it down, how you're going to trade that on different accounts. And then once your plan is written down, stick to it 100%. Because yes, you might go in with a set amount and you might end up losing that. You've gone in with an amount you're willing to lose, right? That's very important. But if you lose that and you've stuck to your plan, then it just didn't work this time. Whereas if you lose that because you did something different, you changed something, then that's on you, right? Whereas if you're sticking to your plan and it doesn't go your way and you end up losing your money, you can at least say, I stuck to my plan. I'm going to wait till I, recuperate my money, get some more cash that I'm willing to lose, and then I'll just fire up again. Maybe in the meantime, I'll look at tweaking something, changing something based on the data I got from the first time around. But very important to stick to your plan, guys. And then the final tip I would give for someone that's new to this is don't isolate yourself. Join communities of traders that do similar strategies to you or similar systems to you that are also trading prop firms. Then you can start trading ideas. You can start getting ideas from them. You can start talking about what prop firms are good, what prop firms are bad. And it's so good to be part of a community of like-minded people that are doing the same thing as you, because you can learn so much and you can teach so much. So those are my tips for a new trader coming in. Now, talking about a community, guys, I just want to end by talking a little bit about the system that I've mentioned in this video. I want to give you a bit more information because this system that I'm currently using, this blueprint, essentially goes through and covers every single one of these steps that I've just talked about. The system I'm using covers all of that. Now, we have a blueprint that we follow. We have an EA that trades all of our strategies. We have multiple different strategies that you pick, and the blueprint and the system covers the automation, right? The EA is covering all of that. Everything I've talked about is in place, and because we have a system that is automating everything, it's very, very easy for us in our community to diversify. And like I talked about, we have people that are running 15 to 20, if not more, accounts at the same time, and it's only possible because of the system we have in place, because we have everything automated, that it's so easy to kind of run this on that many accounts. Now, the other thing I want to talk about is we also have the backup plan in place that I have talked about, and I mentioned it before. And our backup plan is essentially we have a hedging bot that runs and holds hands with the actual EA that's trading your prop firm account, and it's essentially doing the opposite. And this just means that you are always going to make anywhere from 80 to 100% back on your challenge fee, right? So essentially we have always got an 80 to 100% coupon code for every prop firm that we take. And that is such an important backup plan for us because, like I said, it just takes emotion out of the game completely. We have people in our community, everyone in our community, trading with no stress and no worry about if you're passing or failing. We just run the system because we know the data is there and we know the system has an edge. All we can do is allow that edge to play out. And if you allow that edge to play out, you have a lot of success. So much success, in fact, that we currently have got, I think we're nearing 1,500 of our members in our community funded with prop firms. And a lot of those are now, in fact, funded $1 million or more. They've joined our 7-figure funded club, which means that they've been funded over $1 million since starting with us. So we're now seeing so much success come through. We're seeing in the Discord channel daily, the success of our traders, all because they are running a system that works, right? So that's the video, guys. I hope if you are starting today, take this on board, take the steps that I would be doing. And remember, guys, this is just educational. I'm not saying this is how you have to trade prop firms. It's my suggestion. I'm just saying, based on my knowledge, based on my experience, based on the mistakes I've made, this is how I would trade prop firms today. In fact, it is how I am trading prop firms. So with that being said, guys, thank you very much for joining. If you haven't already, hit a like on this video. And also, if you haven't already, make sure you subscribe to this channel for more content like this, guys. Thank you very much for joining. Thank you for being with me today, and we will see you in the next video. Bye for now.